Will the US dollar lose its place as the global reserve currency? There's a lot of talk out there about the de-dollarization trend that's going on. Today, let's dig into why that may actually be overblown a bit and why diversification may help with your investment plan. Hey there, it's Anthony and Alex from One Degree Advisors, and we help you gain confidence in your retirement. So Alex, the US dollar has been the global reserve currency for a good 80 years, and there's that question that's out there about de-dollarization. Are we going to lose that status?
So again, the US dollar being the global reserve currency of choice essentially means that for central banks, that's the dollar, or that's the currency that they choose to have on reserve. The other thing is that it's primarily used when trading oil. That's where we get the petrodollar. But again, the fear is this whole US dominance is coming to an end.
And there's benefits of being the global reserve currency. That's what brings the worry. There's stability that comes with it, lower borrowing costs, overall increased economic power. It's important.
Yeah. The thing is, though, is that the death of the dollar, like we were just talking about this before the video, it's nothing new, right? We've seen this in the past. In fact, we're going to pull up some headlines from The Economist back in 2005, in 2007. So there's been a lot of this. The other thing is, I can hear a lot of people going, well, that was only, 10, 15 years ago. The thing is The Economist, this was the New York Times back in 1975. They have a news headline with the headline, OPEC will sever link with dollar for pricing of oil. So this is back in 1975. This is nothing new. This has been going on for a long, long time.
The dollar has been trending down in terms of the total global reserve, but the war in Ukraine has also accelerated this, and it's contributing to a lot of the noise that's out there.
Yeah, so
right now.
let's kind of dig into that issue, right? So the problem was when Russia invaded Ukraine, essentially the U.S. seized many of their bank accounts. And the U.S. put on many, many sanctions of Russian assets. They removed them from the SWIFT network. So there's a whole bunch of stuff. Essentially what happened was the U.S. weaponized the dollar. And, other countries are seeing this. They're not dumb. They see what's going on and they go, I don't want to be caught up in something like this, right? If we're not on the same side as the U.S. in the future, we don't want to have happen to us what happened to Russia. So you have countries, they're oftenly referred to as the BRICS nations. So Brazil, Russia, India, China, South America. You see headlines of those countries coming together, having talks amongst themselves to trade oil in their native currencies. And I believe there's also talks amongst those nations to also create their own special currency that will be used for the sole purpose of trading oil, and that might be backed by gold. So again, a lot of stuff is happening, and it's happening pretty quick.
Yeah, there is a lot of stuff out there, but it's like, well, what is the alternative? I mean, you could see from this chart that the next closest in reserves is the euro at 21%. That's what, 40% behind. Yep. And then when you talk about, well, does China step in because they're a large economy? Mm-hmm. Well, not many countries trust China outside of their close allies. And so then it becomes, well, what is the alternative?
Yeah, there really is no other good alternative. Now, here's the thing. I do think that it's reasonable for us to expect that the US dollar will continue to shrink or decline in terms of its dominance. And again, that on its face can scare a lot of people. But again, we have to look at this is nothing new. We've seen this before, or at least these fear-mongering headlines before.
So let's really get into how does it affect our investments, right? Let's talk one about perspective and then two about the diversification aspect of it.
Yeah, the first thing is just avoiding sensationalist content. I mean, again, the dollar has been losing some of its currency reserve shares since the 90s. And the thing is if you based many of your financial decision-making around this concept, I mean, going back to the 90s, we can see it from this chart. The S&P 500 has had tremendous returns since the 90s. It's important to realize that there are so many factors that go into this that we can't possibly just look at one thing and go, well, if this happens, then that happens, and therefore I should make this type of financial decision.
That's right. So, and then number two is be diversified.
Yeah, and again, a lot of people might look at that previous chart of the US stock market and go, well, if the U.S. market has done so great, honestly, why would I invest anywhere else? The U.S. has a currency dominance. It's posted great returns. A lot of the revenue for companies in the S&P 500 comes from overseas. It sounds like I'm really well diversified. just in the S&P 500, what we've seen as of lately is that may not necessarily be the case. At least as of the time of this recording, international stocks have really done very well, to a lot of people's surprise, outperforming the U.S. stock market. A lot of this can do with the fact that a weakening dollar can be a tailwind or a good thing for U.S. investors investing internationally.
Yeah, and that would be a big change. Now, the other thing besides de-dollarization that may be on your mind is this debt ceiling debate that's going on in Congress right now. We recorded a video previously on that. We'll go ahead and post that. We'd love to have you check that out as well. Once again, this is Anthony Saffer from 1 Degree Advisors. And we've coached hundreds of families to and through retirement, and we found that there's 5 mistakes that stand out when it comes to retirement. We've put these 5 mistakes into a free guide that you can download. We'll go ahead and post a link in the show notes, or you can go to onedegreeadvisors.com. You can download that for free.